What is happening, everyone? I've just got back from the gym and yeah, it's Monday afternoon. I am in an EV trade at the moment, but that is just a swing. Where's my phone? But yeah, I've also got my meal prep, just handy. Chicken and rice as always, very nice. But yeah, here's my, not even sure if you can see that, I'm probably hella overexposed. But yeah, that's what I'm in currently. Again, it's part of the new intraday strategy that I have. So I do want that to hit by the end of the day. I don't think it will though. I think the transition going from swing trading to intraday is still there, and I just need to understand how the intraday setups actually operate, if you know what I mean, because it's still the same entry patterns and things like that, but not understanding the tendencies of the strategy is kind of what's throwing me off, and it's still early days, so that's why I'm kind of giving myself grace to actually understand how the strategy works. And that's another thing that I say to traders a lot as well. If you don't understand the tendencies within yourself and how you act, and also the tendencies of your strategy, you're not going to be able to operate at full confidence. You'll be able to operate in a space where you would be able to make profits, but if you're aiming to be the best of the best and the best of yourself, you're going to want to be trading with full confidence. And that's what knowing the tendencies is all about. It's about understanding the small nuances so that when these small minute actions come up, you can pick them up straight away, be hella aware of them, and actually be able to direct them back onto the correct path. Well, anyway, I'm gonna munch this real quick and then I'll get back to you guys. So we're officially in Q4. Now is the time that you should take to reevaluate all the goals that you set at the start of the year. Make sure that you have like attainable tasks and attainable actions to put towards achieving those goals. I know for me personally, I've gone heavily into my strategy and I've tried to refine it in many different ways. And I recently started a track record and I'm only on, I think, month 3, month 4 now. I do have a link to it on my social pages everywhere. I make it publicly available. But I've also started developing a second edge within the market. I really do believe that diversifying yourself as a trader is really important, as well as being an investor. You'd want to have diversified risks, which is why so many people say you should invest in the S&P 500 because it's such a well risk diverse asset. Now, when I think of myself as a trader and an investor looks at me as an asset, I want to be able to be that well risk diverse asset. So whether that's they want to put money into one of my strategies and then put the other half of their money into one of my other strategies, that's the kind of person that I want to become. That's the kind of image that I want to give off. With that being said, alongside the two strategies that I trade now, I currently trade a scalping strategy and a swing strategy. They have no relevance to each other whatsoever, meaning that their equity curves are not directly correlated. So, for example, the flash crash that Japan caused at the start of August, one of my strategies did very, very well. The other strategy didn't do so well. It's not because one of the strategies is bad and one of the strategies is good. It's just that they completely work in two different market environments. And that's what I mean by risk diversifying. Being able to make money in different scenarios helps me keep my risk down in the long run. So I won't dive too deep into the strategy that I'm developing now, but it's loosely based off of my swing strategy. I do trade on a lower time frame than I normally would. However, the trade frequency has increased massively, which is one thing that I was looking for, specifically developing this strategy. So yeah, moving into the early quarters of next year, I would hope to have that strategy readily available to the public. I can't imagine myself releasing it any sooner than that, only because I still need to gather so much data regarding it and then actually deploy it as a forward test and then gather data like that as well. Because as much as backtesting works and as much as backtesting builds confidence, backtesting, the data that comes from it means nothing. It means absolutely nothing in the context of an investor. In the context of a trader, it's very helpful. Knowing your max consecutive wins, your max consecutive losses, what your Sharpe ratio is, all those kinds of things. Those are massively important as a trader. But to my investors, they don't care. They want to know what the track record is. And the track record implies that these trades have been actively taken, recorded down, and verified by a third party. If you're serious about getting into trading, I highly suggest that you start a track record, even if you're not profitable right now. And that might seem a bit controversial that, oh, I'm not profitable, so why would I have a track record showing me that I'm not profitable? Over the long run, if investors see that, okay, cool, he wasn't making money, and now they are making money, and they can see that on a verified, audited track record, it does make it more attractive. Okay, cool, the numbers may not look nice, but it shows growth, one, as you as a trader, and two, within the strategy. So who wouldn't want to invest in growth? That's the whole point of investing. Okay guys, so it is now Thursday the 31st, so it's Halloween today, and it has just turned to New York session, and I think I am done for the week. I haven't taken anything bar an intraday trade that I took on Monday. This week hasn't really given anything. I haven't really had anything to go off this week, simply because we've obviously got the elections coming up and NFP is also tomorrow, so price action just anticipates. I haven't really had anything to go off this week since we've obviously got NFP tomorrow and then we have elections early next week, so the markets are kind of just ranging and waiting for more confirmation to how they need to react. Me personally, I did take a intraday trade on Monday and I got stopped out at break even, but I managed to take out 1% from that trade before I got stopped out at break even, so that's pretty nice. And yeah, let's run into that trade real quick. Now, if we look at the trade here, I did get into it on a lower time frame, and it's not my typical trade. Normally I do 4-hour entries and I typically swing these trades over a number of days or a week or two. Now this was only over 2 days before I actually got taken out. So if we hop over to the 4-hour, you can see here at the start of the week that we had this nice little liquidity sweep, and we displaced further down. We left this order block and this breaker here. I could have used this breaker as my higher time frame POI, as it did get respected beautifully. However, I just like to use the bigger picture, and that is this order block here. I use the midpoint as well as a point of reference for my higher time frame. So that was more or less my narrative in a sense. I already had my bias. I was bearish. I needed my narrative and my reason to get in, and that was at there on my higher time frame. So I went down onto my 1-hour/15 minute, and here you can see that I could have actually refined my entry. So on the 1 hour, so I actually had this 1 hour fair value gap in line with this breaker right here, and if I go down onto the 15 minute, you could see that I could have actually refined my entry even more so. So we had the 1 hour breaker, and I could have put my entry all the way up to here to extract a bit more RR. But at the end of the day, it's fine. I don't need to be extracting the RR. I prefer to be in the trade at a secure level rather than trying to be as precise as I can. At the end of the day, I'm trying to have consistent returns rather than precise returns, if that makes sense. If we go back onto the 1 hour, my intentions for this trade was to displace further down, come back up, fill this imbalance and reach our OTE, which we did absolutely perfectly, and then displace further down and taking out this buy side liquidity. Since we didn't have any news on Monday, I knew that we was going to be ranging, and I was okay with that as long as we was more or less respecting this midpoint of the fair value gap and the higher time frame order block, which we did perfectly. So we did that all throughout Monday. Tuesday came, we came back up, attempted to sweep, have a failure sweep, and we also created SMT on Monday, which I forgot to add in. So we created SMT on these highs with GU, which further gave me confirmation that this trade was going to come further down. On Tuesday, we obviously got that displacement down just before the news, and then news came out and this was actually the jobs news for the US. So we had a mixed confirmation with this news here. Now, we had consumer confidence, which absolutely skyrocketed, meaning that consumers were far more confident about job prospects, the future of business, all those kinds of things. They were far more confident that businesses and consumers were going to grow in the near term. However, the job openings, which basically measures how many businesses are actually having active open positions within the job market within the US, that actually came in lower. So investors kind of clinged to that idea more so than the positive data coming from the consumer confidence report. And evidently we rallied up. That obviously gave the euro some short-term strength over the dollar, and eventually ended up having me tagged out at this level right here. So this was actually my stop loss was actually in 0.5% of profit at this point here, and I ended up taking a partial at this level here for 0.5%. Now, had I not done this, I would have only bagged 0.5% on this trade. But since I took my partial and moved my stop loss into profit, I ended up taking a 1% win, even though I got stopped out. This is all part of my risk management plan, as with this kind of trading that I'm taking on, I'm trying to be as risk averse as possible, simply because I risk way more than your traditional trader. With my intraday strategy though, however, I don't risk nearly as much as I do on my swing strategy. On my swing strategy, I could range anything from 2% all the way up to 10%, depending on how confident I am on the setup. With my intraday, since I have a higher frequency of trades, I don't necessarily want to be putting on that much risk as frequently. So I've toned it down just for the moment, down to 1%, and it's a strict 1%. But since I'm able to get a lot more scaling entries, I'll be putting on 1% consistently throughout all the trades. Whereas my swing strategy, I decrease my risk as I scale in more. If this is something you want me to go more in depth in, about my risk management plan and just the way that I approach risk psychologically, then do let me know down in the comments. But yeah, overall, this is a very solid trade. This is a textbook trade that I would take all the time. You could frame this as somewhat of an MMXM. You can see that we have somewhat of an original consolidation here, push up right into our SMR, which was obviously the 4-hour order block, push down right into this rebalance, push down again, back down to the original consolidation, but we didn't entirely sweep it. So it's obviously not a full, complete MMXM. But yeah, this is my bread and butter setups. It's just unfortunate that I didn't get the win on this. However, the most important thing is that I managed my risk impeccably, and I actually did end up coming out with at least a bit of percentage. So at the end of the day, all is well. So as I'm sat here doing my ASR, I just wanted to touch on the fact that ASR is one of the most powerful things that a trader could have, or a trader could do, sorry. Being able to journal all of your thoughts, your trades, just basically everything throughout the week. It brings so much power to someone. Even if you're not a trader, it brings so much power to you, because you're basically just offloading. If you was to have a stressful week, for example, you're offloading all of that onto a paper, and you can choose whether you want to go back to that at a later date, or you can close the book and leave it there. But at the end result is all of that stress is now out of you. There's nothing left. It's all left on the paper, basically. And the good thing about it is that if you was to go back to it at a later date, you can then go and review how you felt, why you felt like it, and then learn from that. Like, if you're asking people, oh, what's the best trading book, or what's the best book for self-development, it's this. Your own journal is the best book for self-development, for trading, for anything you want to do in life. Because if I was to go back and look at my ASRs from a year ago, I can tell that I'm a completely different person just from reading what I've written and just from reliving the same experiences that is written down here. Now, being able to look back at it and use the power of hindsight, I don't know. Now, being able to look back at it and actually think logically, not thinking from emotion, from the standpoint that I was in, it allows you to be better. Who doesn't want to be better? If you're watching this video now, if you're a trader, you obviously want to be better. You want to improve yourself. You want to be the best version of yourself. So why are you not journaling? Why are you not reviewing yourself? It takes a certain amount of self-awareness to actually change. And if you're not being self-aware by journaling or just recognizing your actions, how are you going to improve? So this is why I say, and I always preach about it, when you're doing your journals, you have to go into so much detail. As you saw, I even have a mental section. I write about how I feel mentally. Was I stressed during the week? What contributed to that factor? Did I eat right? Did I train? What could I have improved during this week? How could I have improved my performance? What have I observed in the market? Was there any fluctuations? Was there heightened volatility? Was there lower volatility? All these kinds of things you don't necessarily think should go into a journal. They should. All these little puzzle pieces is what makes up your life. Just not one massive event will make up your entirety of your life. It's the small day-to-day things that you can remember back on in years later. That's what makes up your life. So why are you not journaling about it now to learn from that? But yeah, when I do my ASR, I kind of go in deep. I don't just put on my charts and just explain how the markets have been. It's more of a deep time for reflection, and I've kind of got it down to an art now. I've been through multiple different journals. Like, even for example, I carry a small journal here with me. This is my day-to-day, just put my notes or put my thoughts down into a notepad so I don't forget it kind of journal. And then I've got an actual sit down, let me think of what I'm going to write before I write it kind of journal. And this is where you put everything. I never revisit this though. This is purely a thing to kind of help my mental health. Whatever I put down here stays in the book, as I mentioned at the start. Whatever goes into here, that's it. Once it's in here, I can forget about it. That has like saved me so many times. And then the one that I do for trading is more of like a business insurance, if you want to say that. So I put everything in here, and to have like an actual online document that I can refer back to whenever I need to, and actually be able to find out if I'm going to I can more or less forecast if I'm going to make a mistake just from looking at a review like this. That's why I call it my business insurance, because I can just hindsight the hell out of this and be like, yeah, there's going to be a problem here because of X, Y, and Z.